Well, we know what the Fed is focused on, therefore we know what we have to be focused on. It's non-farm payroll week, and it's going to be a busy week in the markets. My name is Blake Morrow. I'm with Forex Analytics, and you're listening to the Week Ahead video. We're going to talk about this next week, all the events that are coming up that could move the markets. We're going to talk about the new Prime Minister out of Japan, and we're going to really dig into what are the best trade setups going into this next week, and I'll review the ones that I talked about last week as well. I'm going to try to make this a short video. I'm still not feeling well. Some of you that watch our daily videos or daily shows, the live shows, you know I haven't been feeling well all week, and if you look right down over here, it says it's 109 degrees. It is a record today where I live in Scottsdale, Arizona, and I know some of you are saying, you know, whether you're in Europe or different parts of the world, you're probably saying, oh, I'd love to have that kind of heat. No, you don't. It's really hot. It's hot. It's miserable. So I'm going to try to get through this as quickly as possible. So make sure you all stick around. Now, before I even get started, I do want to talk about the 8-year anniversary sale. This is going to be the last week of us offering this sale price, and it is our 8-year anniversary sale. For those of you that don't know that when we put up these prices, once they're gone, they're gone. They're going to be gone for the next couple of months at least, if not the next few months. So make sure you take advantage of it. You want to know what you get? Well, with Forex Analytics, you get analysis on 30 different instruments, not just currencies. You can see there's crude oil, you can see there's gold, there's Bitcoin, there's silver, there's boons, there's the 10-year. Like I said, there's the S&P and a lot of different currencies as well. So there's so many different instruments, but you get multiple types of analysis: macro, candlestick, basic technical, harmonic, Elliott wave analysis, live charts for all these instruments. And then you have a direct live squawk feed. You have risk management tools. You have patterns in play. Most importantly, you have access, and you can see right here, right up in the upper right-hand corner of the screen, you can go right to our chat room where you can, you know, talk to myself. And I'm there all day long. Different traders, see what their different viewpoints on our markets might be. You can talk to, you know, I'm there 15 hours a day pretty much. You can go to the trades room, see what trades I'm running, see what I just pulled off for profit in the dollar Canadian and what I'm running for positions. You could have a news feed, see what the latest news events, sentiment index, latest articles that might be moving the markets, all sorts of things in the Forex Analytics chat room. So take advantage of it on our 8-year anniversary sale. Remember, once those prices are gone, it's gone. So take advantage of it now. The month to month, but the best prices are the semi-annual and the annual subscriptions. All right, now all that out of the way. Like I said, I'm going to make this kind of a quick video. I want to talk about everything that's happened this last week. I actually want to talk about, if you look at the dollar yen, I'm going to pull up the dollar yen and talk about what happened on Thursday during the election. So you had Ashiba. Did I say that? Ashiba. Is it Ashiba? I believe it was. Yeah, Ashiba or Ashida? Ashiba. And then Takashi. Is it Takashi? Oh, I get all these confused. Anyway, it could have been the first female prime minister of Japan running off against Ashiba. Unfortunately, she lost. When he won, the market was already kind of hedging the idea that she might win, and she was very much an opponent of what the BOJ was doing about raising rates. She did not believe the BOJ should be doing that, but because she lost and Ashiba won, the market actually ended up buying back that yen. Plus, it's the end of month. And the end of month, there was a lot of bank flows that were buying yen at the end of the month too. So you saw a 400 and some odd pip move lower in the dollar yen. All the other yen pairs sank. Now, I do think the dollar yen is going to find some support down here. We're going to talk about that technically in just a few minutes. I'll go through it one by one, especially with these currencies, but I just wanted to mention what had happened on at the end of this last week. All right, so speaking of which, let's talk about everything that's happening this next week, and let's start off with Sunday night. We actually have Chinese manufacturing PMIs. Now, before you guys know, let me talk about this for a second. I'm going to stop here for a second. I have a set of charts that I use with you guys, right? I call it the week ahead because I only do the analysis on the week ahead videos. But you're going to notice something happened with the Forex.com feed. Like the euro is not at 112.03. Sterling is not at 134 and change. Those prices actually changed at the end of the week. I'm not sure what's up with that, so I'm actually going to use just the my normal charts that I use on the Face show and the Morning Edge. So these are going to be different looking, but they're the ones I actually use when I'm doing analysis on Forex analytics as well. So if you look at these charts and you see these charts right here, they actually are coming from the same feed that I tend to use throughout the course of the day. Anyway, so with that being said, let's start off with what happened on Sunday, what's happening on Sunday is going to be the Chinese manufacturing and services PMIs. Now, what you're going to notice, unless you were living under a rock, the Chinese markets moved about 20% off the lows last week. China went through massive stimulus efforts to try to basically stimulate their economy. Now, we're going to have economic data on Sunday, but don't expect that to have changed. And matter of fact, you see traders are obviously trying to get ahead of this move, and they're trying to get reallocated into China. But the jury's going to be out. The jury's going to be out whether all these stimulus measures will really turn the Chinese economy. So we're going to have to, we're not going to know that for the next several months, how the Chinese economy is really faring after all these stimulus measures. But as you can see, the markets, as they normally do, got ahead of the move this week, and we're up 20% in China. Big deal. Anyway, Sunday night, we do have Chinese manufacturing and services PMI. Also, what's happening, Monday morning, Sunday night, is the Eurozone, and we have actually German CPI. So that's going to be a pretty important piece of data that comes out on Monday. And notice how the euro is really close to this 112 level. I want to show you while we're here talking about it, and I want you to be focused on, not this red line here, I want you to be focused on that blue line. Now, some of you may remember, some of us that were trading the euro back pre-GFC, when the euro was trading up at 160, you have a descending trend line that comes in right around 112.50. So just because you get above 112 this week, if we do, just realize that just above that, around the 112.50, 112.40 level, that's going to be a multi-year, over a decade-long trend line that's going to come into play. Now, I still think we have this bull flag pattern, as we've been talking about. We've been talking about it on the week ahead video as well. We have this bull flag pattern. Obviously, it's nullified if you drop back below 110. But I think if you are a euro bull or a dollar bear, I think we'll know more on a turn below 110.75, and we start breaking below that level. And I think then at that point you would realize that the dollar is probably going to gain some strength from there. So I think that is where it actually turns bearish. Below 110 is obviously bearish as well, but below 110.75, that's going to be a big warning to anybody who's bullish the euro. Now, moving right along, on Monday, the Fed chair is speaking, and he's participating in a discussion titled "A View from the Federal Reserve Board." So it's obviously going to be about monetary policy. So we're going to have to be paying very close attention to what the Fed chair says on Monday. We also have Chicago PMIs Monday night. Tuesday morning for Australia, we have Australian retail sales. Now, I want to stop for a moment and talk a little bit about the Aussie, because the Aussie, nice and bullish here, bull flag pattern, still looks bullish. The issue that I have right now with the Aussie is by the end of the day, we close back at 69 cents. And you'll notice that if you look left towards the June 2023 levels, that horizontal resistance is basically where we closed at. Now, I've been mentioning a lot on the week ahead videos about this 4-year trend line. We broke above it, but what's to say that we're not in this big range? Now, one of the things I should mention at this point in time, and one of the things that's really helped the Aussie this week, is a 20% move in China. One of the countries that's going to be the biggest recipient of Chinese stimulus, if it turns the Chinese economy, is the country of Australia. And the Australian dollar should do well. We saw it outperform this week. despite the weak inflation data that we got out of Australia. But the fact of the matter is we didn't close above horizontal resistance, or we closed at it. So watching what the Australian dollar does over the course of the next couple of sessions, I think is going to be very important for the Aussie. Anybody who's bullish does not want to see a move back below 68 cents. A move below 68 cents would probably be a fairly bearish event. All right, moving right along, on Tuesday, we will get the Eurozone CPI Tuesday morning. Remember, German CPI is Monday morning. Tuesday morning is the Eurozone CPI. And then on Tuesday, which is the 1st of October, we're going to get ISM manufacturing data. And we're going to get the JOLTS data and manufacturing prices. So this is going to be really important. And let's talk about the dollar index for a moment. Let's get over to the Dixie. Now you'll notice that the dollar index, very, very sloppy price action this last week. We have a lot of end of month flows. We have corporate end of month flows, and you can see the dollar's down, then it rallied back, then it came back down again. All in all, it's starting to find buyers ahead of this key 100 level. Now, once we start getting below 100, then it gets a little nerve-wracking for anybody who's bullish, is because if we drop below July 2023's lows, there is a lot of open air down below in the dollar index. Now, here's the thing. I want to talk to you guys about the dollar because, like I mentioned earlier, the Fed is laser focused on our labor data. This week, yes, we get ISM. ISM is not directly, it does directly affect employment, but more importantly is both ISM services and ISM PM, non-services PMI, manufacturing PMIs, we're going to be watching very closely those employment indexes inside of that data. That comes in on Tuesday and on Thursday. So I don't know if the dollar is going to really break down ahead of the non-farm payrolls, but if those ISMs start to slip, that could be the catalyst that drives the dollar lower, middle of the week. Now, at the end of the week, when we get the jobs data, that's going to be the, did we get a false breakdown? Are we going to get a continuation lower? Does it look like the labor market is finally starting to soften? Those are the types of questions that we're going to be asking throughout the course of the week. And by Friday of this next week, we're going to have a really good idea on the future path of the dollar, because it's either going to be the dollar is going to get crushed, euro is going to get above 112.50, the dollar index is just going to start sliding. We're going to get below 100. And like I said, there's not a lot of open air, there's a lot of open air once you start getting below the lows from the summer of 2023. Or the flip side is, and this is important, so many traders have been trying to anticipate, myself included, that the U.S. economy is going to start to weaken. And it's been extremely resilient for a couple of years. So what's to say this is the month that economic data starts to turn south? It's entirely possible that it is, but come Friday, if the jobs report is not disappointing, we could end up getting a false breakdown in the dollar, or we can just get the dollar completely reversing this next week. So I just think we're at a huge inflection point in the dollar index, and you're going to have to trade very carefully going through this next week. One of the other things that's happening this week, as I mentioned, we have the JOLTS data on Tuesday. Wednesday, we have ADP non-farm. Is Switzerland has CPI Thursday morning. And I want to talk a little bit about the US dollar Swiss franc, and actually, we'll talk about the Euro Swiss when we talk about the reviews from last week. But look at the dollar Swiss. We are at very critical support, which is 84 cents. Resistance is 85.50. So watch the dollar Swiss as we're coming right into this massive amount of support, because this could be a huge level for the Swiss to actually reverse. But the flip side is, if we break down, again, if you look at the dollar index, you look at the dollar Swiss, there's a lot of room to move lower. Now, remember, the Swiss National Bank did have their interest rate decision this last week, and they chose to only cut rates by 25 basis points and not go 50. I was hoping they'd go 50, but they didn't. And we're going to talk about how the Swissy traded around that when we talk about the reviews of the trades of next week. All right, continuing on, like I said, on Thursday, we have Swiss CPI, which is going to be pretty important. We have services PMIs in the US, we have unemployment claims, and then Friday we have construction PMI out of the UK, and then we have the jobs report. And it's only the US jobs report. It is not the Canadian jobs report. But we do have Canadian IV PMI at the end of the week. And I want to take a moment and talk about the US dollar Canadian, just because I think it's been a very interesting currency to be watching and to be trading. One of the things about last week is the dollar CAD actually broke lower. It looked like we're going to have a bear flag pattern, have a continuation lower, broke through horizontal support. Then we got a false breakdown in the middle of the week. And the dollar CAD, through all these flows, the dollar CAD is reversed. On Friday, we closed well above 135. False breakdowns often lead to breakouts to the upside. So when we're talking about the jobs report, if the U.S. jobs report, which, by the way, we are supposed to create about 140, 150,000 jobs, if we end up creating 140 or 150,000 jobs or more, this dollar Canadian could really squeeze because we got a false breakdown right here. Hey traders, this is Blake, and excuse the interruption, but I do want to finish my thoughts about the jobs report on Friday. And I know I just got finished talking about the dollar Canadian and what if we have a strong report. But I was thinking about it a little bit later. This is a little bit later in the day, and I wanted to break back in and say I didn't talk to you about how about if we actually do start to see a weakening of the jobs data, which is entirely possible. And so, I talked about the dollar CAD being a great opportunity for potential longs if the U.S. jobs report is stronger than expected. But what happens if we have that weaker jobs report? Well, I would be focusing really on the euro, because the euro, and let me flip back over here to the morning edge charts and go over to the euro dollar. This is the one that's actually proper. If we scale this 112.50 level, this multi-year trend line, that's going to be a very, very bullish breakout. Also, you got to look at the sterling. The sterling's done, it's done really well as well. But flip side to that too, check out this channel support that we're on. And I have to assume that between now and the time the jobs report comes out, we're either going to be right back up here, or we're going to be challenging probably this level right here. And watch in the event that we break down with strong data. But again, if we have weak data, we're probably going to get a pivot that looks more like that. That's regarding the cable. Then obviously you got to take a look at the Aussie, because the Aussie is, even though we stalled at major resistance here, you can see that major resistance, and you can see we've kind of just stalled right there. We closed at that level. If we get weak data out of the U.S., that should bolster this Aussie dollar, especially with all of this China data. We should see a continued rally in the Aussie. We should see it move higher. And then, another one, and I should bring this up to you real quick just before I finish things off. We talked about the dollar Swiss. Watch that dollar Swiss in this range. I mean, this dollar Swiss is in such a big, tight range, and it could break either direction. I know I talked about it earlier, but I wanted to bring it back to your attention. Anyway, I'm going to be talking about the US dollar South African rand, so stick around, and thanks for the interruption, or sorry for the interruption. Get back to it. It could end up being a big reversal going the opposite direction. So, something I wanted to bring to your attention. And as far as economic data goes, that's pretty much it. I was, kind of looking around. You got monetary policy meeting minutes out of Sweden, excuse me. You got some, got some Mexican data. You got some South African data. By the way, I should show you this really fast. If you look at the South African rand, we had broken down out of a triangle pretty aggressively. We have talked about this on the week ahead video, but I hadn't been watching it this last week, and we are almost ready to complete an AB equals CD move, or an equal leg move. There's a lot of data coming out this next week out of South Africa, like balance of trade, budget balance, private sector credit, let's see, manufacturing PMIs. So with all that being, S&P global PMIs also on Thursday. So there is some data coming out this next week from South Africa, and we might be completing that equal leg move. And if you guys do trade the rand, there's going to be a ton of support probably down here. Once you complete the AB equals CD, and then you have all this horizontal support and Fibonacci extension levels, you might be looking for a reversal in the U.S. dollar South African rand after such a nice prolonged move to the downside. So just a little heads up on what I'm thinking here with the South African rand. Okay, I do want to spend some time talking about what's happening in other markets like the S&P and gold. Matter of fact, let's just go ahead and jump right into what's happening in gold. So in the gold market, once again, all-time highs. Now, I've been very, very laser focused on this 261% extension of the last consolidation here, and it comes in at 2690. Last week we came within 2 points of that key Fibonacci extension, and we reversed. Now, is this a reversal that is going to stick? I'm not sure. But if I was long gold, would I be very careful here? Yes. And would I be very careful if it dropped below 2600, right around here? Yes, that would actually make me worried if I was long gold. So just a heads up on what I'm looking at in gold. Another big market that was moving this last week was silver. Notice how silver hit highs that it has not seen since 2012, but we also got on Thursday a potential false breakout. Now, you've heard me say it even once earlier today. False breakouts tend to lead to reversals. So if you're long silver, you should probably be on notice now, and you start dropping below maybe $30, and we might be thinking a longer term range is in play where we're traveling between $26 and $32 for quite some time. So just keep that in mind if you're looking at silver. One of the other big developments of this last week is what happened in crude oil. Crude oil really started to sell off, but we are finding buyers ahead of all of this support from way back in the middle of last year. So lots of support with crude, but the fact of the matter is it is looking weak. And you can see previous support acted as current resistance this week, and it is trading heavy. And if you are a believer that we are probably closer to a recession globally than an expansion, then you might be a crude oil bear. And this might be something that you want to keep a pretty close eye on moving forward. All right, also, copper was rallying hardcore on Friday, and then it reversed. We hit a new trend high very briefly. You can see that very briefly we hit a new trend high, and then we reversed. Now, if you're trading copper, and I'm just showing you an hourly chart, I'd probably be fairly concerned on your longs if you drop back below 450. You get below 450, that might be a little bit more of a negative implication moving forward. All right. One of the other things I wanted to bring to your attention before I go into the trade reviews from last week is I want to talk about the bond market. The bond market, if you look at the 10-year, the 10-year has had, the ZNs have had a nice recovery, right? Actually, let's go over to the daily chart. We've had a nice recovery over the course of the last several months. Now, the problem with the 10-year, in my opinion, is it might be forging a high before we get to, some of this major resistance, which comes in, close to 117, 118. So I want to show you right here, what I'd be concerned with is if the bond market starts to, especially the 10-year, we start to get back below 113.10, that means that the bond market is selling off. If the bond market's selling off, that means yields are going up. And if that means yields are going up, that means that the dollar is probably gaining strength as well. So keep your eye on this 10-year as it is starting to look a little top heavy after a very nice run higher over the last several months. Anyway, that's my view on the 10-year. The next thing that I want to do is I want to cover, oh, you know what? I should cover Bitcoin. Bitcoin has been unbelievably strong, but I'm going to give you the buts. If you look at Bitcoin, we're basically struggling as we get closer to this channel resistance. Now, you might be looking at that as a channel, but I'm also looking at it as a potential cup and handle pattern on a long-term basis. So there's your cup, here's your handle. Obviously, if you're looking at Bitcoin, we have to get back above 68,000 or so, and once that happens, it could be off to the races. But there's a lot of work to be done between here and there. I mean, we're currently trading at 65,000. So anyway, I just wanted to cover Bitcoin because Bitcoin was on the move this last week. All right, so this is the point in time that I do want to cover the trade setups from last week, and then I'm going to give you the trade setups, the new trade setups for this next week. But before I do that, I want to mention once again that if you have not taken advantage of the 8-year anniversary pricing, please do that, because once it's gone, it is gone. We plan on shutting it down here this next week, and these are prices that traders wait around all year to get involved in our chat rooms, to get involved in the Forex analytics, dashboard, to use this trading tool, to have the mobile app, and they wait around for these prices. So when they get these prices, they can drop their annual and semi-annual subscription prices quite significantly. In some cases, well below $100 a month. So, and those are prices that we just don't normally have. So take advantage of the 8-year anniversary sale. Okay, let's talk about trade setups. So the first setup from last week was short the S&P only below 56.25. So if you look at the S&P, did we get below 56.25? The answer is no, we never did. So I was looking for the S&P if we could drop back below, and let me just show you exactly where that level is at. This blue line basically is what I'm saying, or I was saying, excuse me, on last week. So did we get below there? The answer to that is no. So therefore, trade setup number 1 never happened, or just didn't come to fruition. Trade setup number 2, long Euro Swiss on dips to 94.50. This trade setup worked as long as you didn't hold it through the Swiss National Bank. So what you'll notice is we got to 134.50. Okay, we got to 134.50 right here ahead of the Swiss National Bank decision. I bought the Euro Swiss right here, and I know several people did because you told me that you did. So the next day before the Swiss National Bank, we rallied back towards 95 cents. At that point in time, I told all of our traders on the F.A.C.E show, and by the way, if you don't know how to get to our free shows, the free F.A.C.E show is right here on our website where it says webinars. That's the Flow show. That's free. It's every morning in European hours. Then we have the Morning Edge. That's a private show for Forex Analytics subscribers. But then here's the F.A.C.E show. The F.A.C.E show is, and by the way, next week I'll be covering for Dale Pinkert. He's traveling out of town, so I'm going to be doing all the interviews. We're going to have the Fed guy with us this next week. We actually have some pretty good interviews coming up this next week, and I'll be hosting them. So I'll be doing the interviews as well. Actually, let me tell you who's coming up this next week, because I do have some notes here. Thursday is Joseph, the Fed guy. Let's see. Wednesday is Larry he's an equity markets guy. Tuesday, Patrick is a gold and silver guy, and then we have James Anderson on Monday, who's another gold and silver precious metals trader. So we have a pretty good lineup this next week. So make sure you join us for free. It's on the F.A.C.E show. But as I was talking about last week, when we were on the F.A.C.E show, the Euro Swiss had rallied towards 95 cents, and I told everybody there and on the private shows for Forex Analytics, I said, I'm going to get out of this ahead of the Swiss National Bank. I'm going to take this gift. And Ryan Littlestone said, yeah, you never kick a gift horse in the mouth. That's right. I took my quick, 40 some odd pips, took it off the table. But then the Swiss National Bank disappointed the market, and you can see the Swiss actually strengthened at the end of the week. So, did it work for you if you bought the Euro Swiss at 94.50 and just hung on to it? The answer to that question is no. But if you were engaged with our live shows that we do for free, you would have known that I took profits and I got out. So, hopefully you did the same. First setup didn't really happen. Well, it didn't happen. Second setup, yeah, I think you could have made money, and you probably made some pretty decent money. I know myself and several other traders in the Forex analytics community for sure did. And then the last one was long dollar Canadian above 136.50, and that never happened. Matter of fact, the dollar Canadian came under pressure this week. We never turned around and broke back above the 136.50, which is really far away. Now, I talked about the dollar Canadian about being the false breakdown. We're going to go into that, or I actually already went into it, so I don't need to go into it again. So we had two trade setups that just didn't come to fruition. One of them, I think you could have done pretty well with it. Okay, so here are your three setups for this week. The first one is short the euro dollar close to 112, knowing that 112.50 is your risk. Above 112.50, it gets above there, you don't want to be short anymore. As traders, what we try to do is find the best risk reward based on what the, trying to have a macro backdrop behind it. And in this case, I still think the U.S. economy is building and creating jobs. Like I said, on Friday, the market's expecting 150,000 jobs. I think it's been a very difficult bet against the dollar. So if the euro makes it towards 112 or close to that, I would be selling strength. That was setup number one. Setup number two is sell the S&P on a move to 58.35. Now, I'm going to show you really quick. I'm going to take you over to the week ahead videos, symbols, and I'm going to go into last week's S&P chart that I was looking at. And I was looking for a move up towards the 127% extension for a reversal. Same thing applies for this week. This week, if we can see a move towards that 127% extension, I think that is going to be a good short up there ahead of the U.S. elections. So that's trade setup number two. Trade setup number three. The buy the dollar yen as close to 140 as possible. And if you don't know why that level is so important, and actually we could probably say 140.46, is because if you look at this long-term chart in the dollar yen, and you go from the lows of January of 2023 to the highs of 2024, the 618 retracement is at 140.46. About basically 140.50. So if you can get long somewhere near that 618 retracement, I think you have a good risk reward for a potential bounce. Again, a lot of the yen movements came because of the new incoming president for Japan, who is more in line with the BOJ and does believe that the BOJ has to continue to raise rates to fight deflation. That's one. The other thing I wanted to say about the yen and the reason why these levels are so important is because I think that a lot of this yen strength that we saw at the end of the week because of the Shiba election and then also the Japanese election, but it was also end of month flows, and I think a lot of those end of month flows have been done now. That yen buying. So I think we'll see some moderation going into this next week. Remember, the economic data out of Japan is important. We're not going to have any real major economic data out of Japan this week, but moving forward, we're going to have to watch that Japanese data, because if it continues to show that that Japan is continuing to grow even with higher rates, that'll entice the BOJ to raise rates as we go into year end. Well, guys, if you enjoyed this video and you think it's these week ahead videos are instrumental to you preparing for this next week, make sure you give me a thumbs up. Give the team a thumbs up. Jump down in the comments below. I'm sure there's a lot of data points that I missed this week. Again, I'm not feeling 100%. And if you haven't noticed, look down there on my toolbar right here. It was 109 degrees. It is now 111. It's hot here in the Valley of the Sun. So with that being said, I'm going to go for today. Have a great remainder of your weekend, and thank you so much for spending time with me, your time with me. I know it's your most valuable asset. So I'll see you on the F.A.C.E show Monday morning. Remember, I'll be hosting. Dale Pinkert won't be there. So I'll be there with Ryan, and I believe Stelios will be joining in, Steve, and K-Man hopefully will be back sometime next week. All right, guys and gals, have a great remainder of your weekend. My name is Blake Morrow with Forex Analytics. Join us now. Take advantage of those 8-year anniversary prices. Talk to you later. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.